Welcome back to the Neuro Finance Masterclass. Today, on day 126, we track the literal migration of institutional crypto wealth. I'm Abraham, and we are right in the thick of Phase 2 of our 365 Days to Financial Freedom series. Today, we're totally elevating your analytical edge. I'm here with my co-host, and our theme for today is Exchange Netflow and the On-Chain Supply Shock Matrix. We're taking everything we know about liquidity migration and moving it from pure theory into hard, undeniable data.
Exactly. Let's do a quick reality check right off the bat. Look, there are basically two types of players out there. You've got your reactive amateurs, right? They're constantly frantically refreshing order books, getting completely swept up in social media rumors, just kind of guessing if a sell-off is coming based on sentiment. But you're an architect. And architects, well, we don't rely on whispers. We monitor the immutable infrastructure of the blockchain itself. We're tracking exactly where the literal wealth is moving.
So, here's our game plan for today. We'll start with how the ledger never lies, break down the Netflow equation, and then map out the architect's matrix. After that, we'll hit the core liquidity filter and finally wrap up with the Netflow audit. Let's just dive right in.
All right, part 1. The ledger never lies, and we're mapping distribution.
Candlestick charts are great, but they really only tell you what's already happened. If you track actual, physical token movement, man, that gives us a massive edge. It lets us map out wholesale distribution literally weeks before the price chart even flinches. To really grasp this, we've got to reframe how we look at centralized exchanges, places like Binance, OKX, Coinbase. As a macro strategist, you can't just see them as slick trading apps. They are the primary arenas where digital assets are liquidated into hard fiat cash. So, when you track tokens heading toward those specific gates, you're watching the intent of the market's biggest players in real time. Anybody can spoof an order book, but on-chain asset movement? That is an unforgeable physical truth.
Which brings us to part 2, the Netflow equation. We're talking inflows versus outflows.
Okay, to really understand Netflow, we need to break it down into two distinct variables. First up, exchange inflow. This is simply the total volume of tokens moving out of private wallets, or massive whale wallets, directly into centralized exchange addresses. Meticulous data scrapers audit these known wallet clusters every single hour to get this exact metric. Basically, if inflow spikes, it means assets are leaving the safety of a private vault and heading straight into the active liquidation arena. They're getting ready to sell.
Now, flip that around and you get our second variable, exchange outflow. This is the total volume of tokens being withdrawn from those exchange addresses and locked away into secure, private, multi-signature cold storage vaults. Think about it for a second. Whales don't just leave millions of dollars sitting on an exchange desk, right? When a heavy hitter buys an asset, they pull it off the exchange for safety. So outflow is your undeniable footprint of accumulation and security. Put them together, and you get the ultimate directional balance. Exchange netflow equals exchange inflow minus exchange outflow. That's it. This uncompromising formula calculates the net change in supply sitting on exchanges just waiting to be sold. Once you wrap your head around this simple equation, you can literally stop guessing the market's direction and actually start measuring its exact physical weight.
Moving on to part 3, the architect's matrix. Let's look at the actual supply and demand realities.
Let's break down the high-danger scenario first. When you're seeing a high positive net flow, meaning it's greater than zero, inflows are heavily outpacing outflows. We're talking thousands of tokens just flooding onto exchange desks. And here is an absolute rule of the market. Whales do not move assets to an exchange just to look at them. No way. They move them there to establish immediate sell readiness. That creates massive floating sell pressure, which statistically means a macro price top or a violent flush is imminent.
Exactly, Ibrahim. But let's flip that over to the supply shock scenario. This is your extreme bullish setup. A highly negative net flow, less than zero, means outflows are completely dominating the grid. Massive structural blocks of supply are just fleeing the exchanges, disappearing into cold storage vaults. This points to serious, long-term institutional accumulation. The immediate floating sell-side liquidity is totally drained, manufacturing a powerful supply shock. So when fresh buyers step in, the absolute lack of available tokens just forces the asset into this crazy parabolic vertical expansion.
Let's hit part 4, the core liquidity filter. This is how we defend against manipulation. Understanding that matrix is really just step 1. Deploying it to protect your capital, that's step 2. You've got to beware of the fake-out trap. Just imagine a token's price pumps like 15% on this beautiful, textbook technical breakout.
Retail traders see that surge, FOMO kicks in, and they rush in blindly. But if you pull back and look at the underlying data, and you see that on-chain Netflow is printing a massive positive spike at the exact same time, the math is telling you a really dark truth. You know with total mathematical certainty that insiders are using that visual breakout as exit liquidity. They're moving their holdings to the exchange to dump on retail buyers. So the price is ticking up, but the smart money is heavily cashing out.
On the flip side, here's how you spot a real launchpad. Say an asset's price is flat, just sideways, boring, incredibly quiet price action. But underneath, the net flow is draining aggressively into negative territory for weeks. What's actually happening? Well, amateurs get bored and leave. But an architect knows smart money is quietly vacuuming the floor. They are just absorbing all the available supply and withdrawing it to cold storage, completely without moving the price. That structural sell-side liquidity is just vanishing into private vaults. The fuse is fully lit, guys, and an explosive move is just waiting for a single spark of volume.
All right, part 5, the Netflow audit. This is your actionable mission.
We're going to move fast here. Here's your exact 4-step audit to run today. First, open up your preferred macro on-chain suite. Glassnode, CryptoQuant, look into Bitcoin, whatever you use. Second, pull up the Bitcoin Exchange Netflow chart and make sure it's perfectly overlaid with the daily spot price. Third, just scroll back through time. Locate those massive positive Netflow spikes. You'll see immediately they hit right before almost every historic cycle market top. Literally clockwork. Finally, step 4. Check where the 30-day balance line is tracking right now. It's time to stop guessing what whales are doing. You have the actual tools to audit the gates, measure the flows, and mathematically rule this cycle.
So I'm going to leave you with this defining question to think about as you fire up your software today. Is the asset pool accumulating inside secure private vaults, setting the stage for a massive supply shock? Or is it migrating toward those centralized exchange liquidation desks, warning you of an imminent dump? Look at the ledger, calculate the flow, and step up into your role as the architect of your financial destiny.
Absolutely. For Ibrahim and myself, we'll see you tomorrow for day 127 of the Neuro Finance Masterclass. Stay sharp and keep analyzing the data.